What's up, guys? It's Mr. Fit to Flourish. This is part 2 of the candlestick pattern series. Okay, we're gonna get right into it. And in order to understand candlesticks, candlestick patterns, we need to understand what the most common is. So the most common chart is a Japanese candlestick chart, and that's used throughout the United States as well as across the world. Okay, across the world. So get right into it. So what is a candlestick? Well, a candlestick is a representation of how price moves in a specific time frame, a specific given period of time. Now, a lot of people don't understand how these work. So green means bullish. So it means that at the bottom area here, at this bottom flat part of this rectangle, this is where price opens, okay? And price moves up. Now in a red candle, price opens at the top and moves down. So it's showing you that price is moving down. And on a green candle, it's showing you price is moving up. The middle part is called the body. These stick parts are called wicks. And then you have the high, the low, the high, and the low. Again, for green candles, you start at the bottom and you move up. That's why it's green. And then for red candles, you start at the top and move down. That is the direction that price is moving. You need to understand this. Middle part is called the body. The top and the bottom parts, these skinny tails, they're called wicks. That's why they're called candlesticks. Okay, they are called candlesticks. Now let's talk about the patterns. Okay, first you need to know, what is an uptrend? An uptrend is when you're getting higher highs, higher lows. Looks something like this. Downtrends, it's when we're getting lower highs and lower lows. It's when candlesticks are moving down like this. All right. Now the most basic of patterns would be known as the flag pattern. Now you can have bull flags or bear flags. Now this is a type of chart pattern that it helps you predict what will happen next. So usually you get a huge move to the upside, a huge uptrend, and then you get sideways to down movement, and then a breakout back in the direction of the trend. And bear flags is the same thing. Let's keep it moving. So pennants look more like a wedge. So you get a move to the upside, you get this triangular shape, and then a continuation move. And then for bearish, it's downward, you get this triangular shape, and then a break down. Okay, we're gonna move pretty quickly through this stuff. Now we talked a little bit about some of these patterns. Some of the ones that you see most often and that I think you should pay most attention to would be the inverse head and shoulders. So if you see something like this, then on this right shoulder, you're gonna get a big move to the upside. And then for the head and shoulders, when you see something like this, you get a big move to the downside. Another very common play that you see quite a bit is the double bottom and the double top. So double bottoms typically have moves to the upside. When you get a double bottom, what you get is the first bottom, then you get a move up. That move up creates what's called a neckline. Then you get that second move down, and then after you break above that neckline, that is a breakout. And you typically get a huge move after that. So these patterns are really good setups. And then two other ones that I really like are ascending triangles and descending triangles. Well, in an ascending triangle, what happens is you get flat tops. You get a flat top, but you get increasing price. So you get an uptrend, but then you have a flat top. So you're not getting higher highs, you're getting the same highs, and you're getting higher lows. And then a descending triangle, oh, and that's really bullish, by the way. And then for a descending triangle, you're getting a flat bottom and a downtrend, okay? Downtrend. And then last but not least, we have symmetrical triangles. But I don't really see that too much. Let's talk about the cup and handle. The cup and handle. This one you'll see quite a bit. And this is how I made a prediction that kind of blew up on TikTok when I said, hey, SPY is going to 550, and then we're going to see some consolidation. And everybody was like, no, it's going down, it's going down. And then it rips to 550. And everyone's like, oh my gosh, how did you do that? And that's when people started to pay attention. I said, well, I've been studying these chart patterns, and they really work because they tell you a lot about price action. basically a cup and handle is exactly what it is, exactly what it sounds like. It's a cup and then a handle. So the handle is typically no more than 50% the depth of the cup. So it won't come all the way down. If it comes all the way down, it's not a cup and handle. Okay, but basically you get a cup, you get this pull down to about 50% of the depth of the cup, and then you get a breakout and a move up. Now that move up is typically the length of the depth of the cup. That move up. Okay, from the bottom of the handle up, it's typically the length of the depth of the cup. All right, let's keep it moving because there's a lot of patterns. All right, let's talk about this. So inverse hammers. So an inverse hammer at the bottom of a downtrend is this, indicates buying pressure. Okay, buying pressure. Now, bullish engulfing, what does that mean? So it just basically means a big green bar eating up a little red bar at the bottom of a downtrend. So that signifies a reversal up. Piercing line. So a piercing line bar. A piercing line bar is basically a bar where you get a move down on this first bar. The second bar then pushes up and goes up more than halfway the way that the bar went down. That typically shows you that there's enough opposite pressure to cause a reversal. Morning star. So what is a morning star doji? A morning star shows that selling pressure is going away. So you had a lot of bear bars, a lot of big trend bars to the downside, and then we get this small morning star doji, is a small bar that shows you, hey, a lot of that strong buying pressure is going away. And then one thing to keep in mind is that there are two different types of bars. There's trend bars and there's non-trend bars. Okay, trend bars and non-trend bars. And I wanted to kind of show that real quick. I'm going to share this tab here. So what is a trend bar? So a trend bar is a bar that contributes to the direction of the trend. They typically have pretty big bodies, and the bodies are 50% or more of the entire bar range, and it helps you to decide where to enter a trade, and it could be used for confirmation of entry. Now, non-trend bars are small bars. Okay, they're small bars, and they usually are dojis or really small, and they don't give you any idea of where the trend is going. And then here are some examples of trend and non-trend bars. So the circles show you some non-trend bars, and then the arrows show some big trend bars contributing to the downward direction of the trend. Okay. So let's go back to our patterns. So continuing with our patterns, we then have 3 white soldiers. This is pretty bullish when you have a downtrend, and then you have 3 green bars in a row, pretty bullish. Now we're going to talk about reversals down, or patterns that show that we're going to be moving down. So the hanging man doji is basically a big red head and then a long bottom wick. So at the top of an uptrend, that shows that there's a lot of selling pressure and that we're probably going to come down. Now the shooting star doji shows you that buying pressure is going away and sellers are stepping in. So I always tell a lot of my new traders, when you see a long topside wick, that means that you have sellers stepping in, pushing price back down. So we had a green bar. This used to be a green bar, and then sellers came in and pushed price down. And then just like we had a bullish engulfing, we have a bearish engulfing bar showing you that selling pressure is eating up this little green bar is bigger than buying pressure. Okay. And then we have what's called an evening star doji, where again, when you get these small bars, it's showing you that buying pressure is going away. So the green bar is smaller here. We had a lot of buying pressure down here, big green bars, meaning there's a lot of movement up. And then all of a sudden we get this small bar showing smaller pressure up, which means we probably could get a reversal. And then we have the 3 black crows, which is basically 3 red bars in a row showing a lot of selling pressure. And then these are things to know. These are dojis. So a doji is when the open and close price is pretty similar and you have these long tails. And you have different types of dojis. You have a gravestone, dragonfly, and long leg doji. So again, dojis are trading sessions where open and close price are the same or small in difference. Okay. So good stuff. So that is part 2. That concludes it for part 2 of our chart patterns. If you have any questions, drop them in the comments. Again, thank you to the subscriber who asked about these patterns, because they are really important, and I noticed that I really didn't mention them outside of the trading course. So thank you so much. Thanks for tuning in. It's Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
It's the process of the grind that shapes you and forms you. It's not the game. You think you become a champion on the field? You don't. You become a champion when ain't nobody watching you. You're doing your own drills in your own way. You're doing what coach tell you to do, and you're doing your own stuff. You become a champion in the dark when ain't. It is the